All right, good morning, ladies and gentlemen. Welcome to the first show of 2021, the new year, and got a few new things happening here. One is I have a new headset, microphone, so it's wireless, which is kind of nice, but I'm not sure how the sound quality is going to be compared to the other one that I had. However, it seems to be working okay, and the sound level seems to be good, so we'll have to see. I'll check out the replay. As you guys know, every Wednesday, um, sometimes 15 minutes, sometimes half hour ahead of starting the show, I post the live stream player on the web page that you watch it from live. And so if you ever hit that page and just see a black screen or whatever, and the show doesn't start, then just hit F5 on your keyboard to refresh the page, and you'll get the live stream. Let's see, what else? Um, well, that's basically all the show notes there. So everything seems to be working okay. Oh, I guess there's one other thing that I should mention is that this wireless headset that I got has a battery in it, and I can envision one day in 2021, I'll be doing the show and the battery on the headset could potentially give out. So, I mean, it says that it's got 3 to 4 hours of battery life in it, and so shows usually, 30 minutes to 30 to 60 minutes. So, I just need to remember to keep it charged, but that could potentially happen. So that's about the only concern. Other than that, I'm really enjoying the wireless headset. So with that said, take a look at the markets here. A lot going on. Basically, the S&P. I adjusted this trend line a little bit, right, on the S&P here. So let's see. What year to date? That's pretty funny. When I click year to date now, it's just showing this year. So I mean, it's been a wild ride to get where we are now, and the past, let's see, what day was this? This is towards the beginning of November when it broke out this little triangle here and has just been sort of riding up like this little channel here, right? It seems like a little sort of tight channel. I could almost usually don't like to on an individual stock, I'll put an upper and a lower channel, but I had this lower trend line a little bit different, but the other day, what day was that? Oh, it was this past Monday. Yeah, the market took a pretty good winger on Monday, so that's kind of interesting, and then rebounded a little bit. So hey, I mean, who knows? When I see something like this, I kind of expect that the days are numbered here, and that eventually this pattern will get broken, typically to the downside. I mean, it looks like downside, but hey, you never know. I mean, this is a crazy market here. So anything can happen, right? We've seen over the past year, I would say, periods where the market has sort of, what looks kind of like an unsustainable and almost parabolic run up, and then and then many times, it continues to go parabolic. Like this is a good example. This area back here in August, the market was having a nice little run up there, and that seemed like sort of an abnormal rally, and then it just really took off parabolic. So there's every possibility that can happen, but thing of it is not really to, as everybody knows, don't try and second guess the market, what it's doing or why, because you could always make a huge bullet point list of why the market should do what it's doing or what you think it's going to do, and then you could debate that all day, but the reality is it does what it's going to do. And within that context, we're just swing trading individual stocks based on their individual chart patterns. And as I've been saying for a decade on this show, the market's a popularity contest, right? Stocks and sectors come and go from favor, and To me, it's more of a popularity contest than it is, sort of a rational, and you see that a lot right now. Value stocks, a lot of value stocks out of favor, and stocks with reasonable valuations and good earnings in that, are underperforming stocks that have what seems like unrealistic market caps, and they don't earn money, they lose money, and these IPOs have been going crazy. And of course, there's certain sectors like solar and alternative energies, really been performing well. And I guess, I guess there's all the narratives surrounding that, which I'm not going to get into here. But I read something the other day that there's a big list of countries, like maybe 6 or 8 countries, that have literally mandated that by like 2030 all new cars have to be electric. And so the EV sector, the electric vehicle sector, has been really hot. Now, of course, that's 9 years from now, and a lot can happen between now and then. But the market likes to pick up on trends, even though they're way way out in the future. And so, yeah, I mean, anything having to do with battery technology and electric vehicles has been super hot sector. And it is what it is. So oil's been rallying too, which is kind of interesting. The dollar's been dropping. There's just so many cross currents. But again, our main focus here is actually trading individual stocks. And so, with that said, let me get into some of the trades we have going here and take a look at them. So I'll start at the top of the list. You guys see that Walmart just triggered in basically yesterday, right? So there's what Walmart looks like as of right now. Interestingly enough, it's got a pretty decent little pattern going here, right? There was here was earnings, and then it was rallying, and then it went into sell-off mode. And so I'll just draw a real simple sort of trend line across what I think is a reasonable spot to draw it, and here you go. And so obviously in hindsight, this particular day turned out to be the pivot low day, and you can see we had a trade over here in Walmart that basically got closed. Looks like it basically got closed on earnings, but nevertheless, this sell-off here was just, I'd call that a shallow pullback. And then we got sort of a change in trend happening here, right? So there was another little sort of knockout day, but anyway, Walmart's triggered in. It's kind of a slow mover. In the past, we've had some pretty good success with the swing up and down swings in Walmart. I've never been a huge fan of it, just as far as a swing trading stock, just because it's got a low average daily range, right? Average range on this is less than a couple of percent, so it's a slow mover. It's a slow mover. It could take. I haven't put the target on here, but I will right now. I say that, and then I've said that in the past, and then all of a sudden, it'll make a big move. But anyway, sometimes you have to pick and choose. A lot of people, and that's part of the idea, is that you pick and choose which of these stocks do you think sort of suits 150 sort of suits your style of swing trading. And some people like stocks that are less volatile and probably not gonna offer huge moves up and down. So some of the other ones that have come through the system, geez, you might have 7-8% average daily ranges, and so they're extremely volatile, right? And so riskier as far as like taking stops and that type of thing. So anyway, Walmart, so far so good. Trigger was down here at 146. it closed a little bit over the trigger and triggered in a little bit higher. No big deal. Yesterday's open was 146.60, and so basically, how you would compensate for that would be to set, if you entered, say, at the open yesterday. I talk about this every week just for the benefit of new members that might not be clear on what to do, because over the years I've that doesn't want to stay there. Um, Over the years, everyone tends to fixate on the trigger price, right? And so the actual entry may be over the trigger price. A lot of times it is, and the stocks go on to make, significant moves, and in the big scheme of things, it's really makes no difference. And so I go over this every week, but the way to compensate for that is to simply set the target where you're going to sell half, usually. I mean, you could sell all of it, but you just compensate for that, with the difference from what you actually paid. And so the other thing is that just because the open price here was 146.60 yesterday doesn't necessarily mean that you could just jump in at that price, or that's I'm not even sure how they officially figure out the open price. And typically in the first 5 minutes of trading, stocks are sort of all over the map. So, and you can see that, it opened and went down through the trigger price. So in the case of setting a limit order at the exact trigger price, where you'd have got filled, and so that's viable. Honestly, there's three entry strategies that you can choose from, and a lot of part of what we're doing here is that it's okay to use some discretionary tactics trading this system. So as far as the three different entry strategies, one is when a stock triggers in, it closes above the trigger price. The following morning, it's a buy at the open, as long as it's at the trigger price or above, right? So basically, you just buy at the open, set the stop loss, and then of course you can use the compensation target I talk about. The other one is if there's a gap over the trigger price, and it's significant, you can say, okay, well, I'm just going to set a limit order right at the trigger price and see if I get filled. The main problem with that is that a lot of the stocks that really, take off and rip higher, they don't always pull back to the trigger price or trade, at the trigger price. And so, if you did place a limit order there, you run the risk of not getting filled, right? And then the stock goes ahead and runs and makes a huge move and, rips through the target and goes up, keeps going. And so you look back on it and you think, well, geez, I shouldn't have worried about the small difference, even if it's a percent or two, even if it's a couple percent. So, the way that Jeffrey likes to, the third method is the one that Jeffrey recommends, and this works well now that there's no commissions, right? Like back when we started this, we used to have to pay commissions to trade stocks, but the best way to do it, I think, is, well, I won't say the best. I'll say, like, probably the easiest on your nerves is you take a half a position right at the open, and especially if it's a big gap, and then you set the a limit order on the other half at the trigger price. So that's sort of a nice compromise there, because because you're definitely in on half the position, and maybe you don't get filled on the second half, but you still got a little bit going, so psychologically you're feeling okay about it, right? Now, in something like this, $146 stock, and in a 60-cent open past trigger price, no big deal, but we've seen quite a few of them over the past couple years that have been significantly over the trigger price. So anyway, moving on, Walmart looking pretty strong here today. Nice little change in trend. And so the idea is that The idea is that the system detected potential change in trend, and we're looking for it to sort of cut back up, and that target's easily achievable. So that one's just open. The other four have been open for actually quite some time, right? So moving down the list here, we have FISV Fiserv, which let's see, it triggered in on basically at the beginning of the year, like it closed at just a little bit above the trigger price on New Year's Eve, and then opened the first day of the year. Look at how, and of course, that was the day where the market, right, the very first trading day of 2021, the market took a winger to the downside. And interestingly enough, the stop was, kind of below the low of the pattern, so it didn't get hit. And then it's essentially like right back to where it started here. So no big deal. No big deal at all. The thing about this pattern, this is not much of a pullback, to be honest with you. This is one of the cases where, when I looked at the pending trades last week and talked about, the different pullbacks and so, a stock like this will hit the list after a little bit of a pullback, sort of with the expectation that it's going to be, a, a little bit deeper than this, and then the trigger will follow it down and meet it out in the future. And I'll show you one. There's a really good example of one on the pending list right now. But anyway, this one, I sometimes I refer to it as triggered in prematurely, but every now and then you get like just a little shallow dip, and then this is kind of, it's kind of trading sideways here, and so it could easily cut back up. But um, so right now, I mean, it's just still kind of trading sideways in this little box here. So not too exciting, but it's only been, today's basically the third day. So not too much happening there. But the market, interestingly enough, opened down today and started ripping higher, essentially from shortly after the open. And so it's got back about, and I'm going to say it's got back about 3/4 of that little pullback from Monday. So that's kind of interesting. Moving on with the open trades, MOH. Look at that. And this is actually this is a delayed chart, right? For whatever reason, these charts I used, which used to be real time, are now delayed. But for the purposes of this show, it's not a big deal. So they're still the easiest charts to draw on and mark up and that type of thing. So I still use them, right? And we'll continue to use them until I have to move to something else. And there's been a couple of times that I've thought about moving to something else, but I've tried everything and I have just never found anything as easy to draw on and mark up and edit in real time as these free stock charts, which can only be used in Internet Explorer nowadays. So, but all that aside, look at this. Pretty amazing. This was one that I talked about it triggering in even last week on the show. When I drew this trend line, I talked about it sort of how it was kind of weird that, it was sort of triggering in below the trend line break. But again, the system doesn't draw lines or anything like that. It just so happens that I drew this line across these highs and thought, hey, a technician would look at a chart like this and say, okay, this is where you want to enter when you get a trend line break, right? And so, but the system determined that the trigger was down here, probably because of like this little sort of kind of a double dip and lower dip, and so the change in trend. Look at this reversal day and these three, like on three white soldiers. If this was a candlestick chart and the candles were white instead of green. But anyway, traded sideways for a few days, started to get something going, and then look at today. There's got to be news on this, but I'm not gonna worry about it or look it up right now. But look at that, it gapped down at the open, and then just took off. Right? I mean, it's still, we're not even an hour into the session, and this thing's up almost 6% here. So big move, very significant move. And so, here's an example where the trigger price was 206.50, as you can see, and then the following day it opened at 207.96, right? And he's an expensive stock, but you wouldn't have wanted to sweat the small stuff on that because, this is a prime example of when they work, a lot of times they really work well. And so Jeffrey always says to think of the trigger price as more of a trade barrier, right? Like that's the level that the price needs to close above in order to confirm a change in trend from the pullback, right? So, and you'll get these cases where you'll see a stock just poke over the trigger price a bunch of times, but you never get a close over it. And the way that, the way the back end system, which is fully automated, it's all computer code, and it basically generates these trades, and it has a rule set. And so the rule set is that the trigger level, I guess you could say. It'd be better than even calling it a trigger price, would be the trigger level. But basically we're looking for a close over that, and that keeps you from that. Well, that basically attempts to, and it works pretty good, but it keeps us from jumping in prematurely, or like a little false sort of a false move, right? And like I mentioned each week, the professionals tend to use the closing price. You look at charts, you see on like CNBC, all the charts are line charts using closing prices, right? And so I guess institutions, I don't know, maybe they ignore the intraday noise, but the real key is a close above a certain level indicates that they always there's an old Wall Street saying something about professionals use the closing price. You've probably heard that. So anyway, that's just sort of the way the system works. So anyway, don't get hung up on the trigger price necessarily, because the trigger level is just it's basically the level to beat in order to help confirm that the change in trend is indeed manifesting. So this one looks great, right? As of yesterday, the thing was up, roughly a little over 4%. I mean, it says 4.6% in the open trades, but so it's up roughly, 4%, but it's up 5.3% as we speak right now. So it's a big long range day here. Interestingly enough, look at some of these prior runs. Look back over here on the left side of the chart, and you can see how there was 3 or 4 long range days in a row right here. This thing just ripped higher. Over here, you had a sort of it was coming off of a dip, but you had 3 long range days in a row, and so sometimes you get a move like this, and depending on what the news is, I mean, I'm fairly confident there's some kind of news that came out in order for it to make this sort of a move, just based on the recent price action. So I might actually sneak a peek and see what that's all about later on after the show. So okay, so we've gone over the first 3. There's 2 left, 2 open trades left. It's kind of nice to have just a reasonable small list of of open trades right now. All right, so here's NEO, which, since we last talked, right? Let's see. There's last Wednesday, right? So had this pullback, pivot low, triggered in basically right here at around the trigger price, And you know, it had already run up for a few days and had that long range day. Then it took a dip, right? Now, so this initial stop, it wasn't it wasn't down at the very low of the pattern, but it was kind of below the day past the pivot low. But anyway, regardless of that, this initial stop stayed in place basically the whole time. The stock pulled back here and then had this reversal, and then this day, I guess last Wednesday, like the day after, the day after the reversal, um, this stop would have like inched up a little bit here to go just basically below the low of that day. The low of that day was 42.23, and so the stop just kind of inched up below that. Now that we're getting some decent forward progress here, I would expect within the next day or so, like maybe today or tonight when we update, this stop will probably ratchet up to, ratchet up somewhere to trail up now that it's made a pretty good move and moved through the target. So beautiful pattern there. Good looking stock. This is more of a high powered stock, right? So I was talking about Walmart. As of yesterday's close, this thing was up roughly 16% from the trigger price. And so that's extremely significant. So this is sort of the big winner right now. Let's see, it's up 1.5% roughly this morning. NIO 5404 real-time quote. So that's pulling back a little bit, but yeah, nice little run here. This is actually kind of a decent pattern. So, broke out and had a decent run, nice little pullback, and then another run, and so could easily dip again. But typically on something like this is almost ideal. You get sort of a deep pullback, right? Percentage wise, I mean, think about the percentage on this pullback, 57 to down here at 39. So that was significant. And then you get that change in trend, we jump on board, and ideally, that's exactly what it does here. So moving on, the very last but not least open trade that's been open since the end of November, right? And this one's sort of a surpriser because the way that it was sort of chopping up and down sideways, I didn't have real high expectations for this over the past couple of weeks when we were looking at it, just because it started off, and spent a couple of weeks just doing nothing, going sideways. Then there was that one sort of day right here, long range day that broke out of this congestion. And the very next day, you got a gap up right around the target, and then another sell down. And I figured, at this point, I thought it was toast, And this just goes to show that like, what I think is not is very seldom what actually happens. And so, if you just follow the rules and and just play them by the numbers, well, then you don't have to worry about that and second guess it and all that type of thing. And over this series, over the longer run, you'll do really well because of the way the system's designed to basically, stick with the stocks that move and cut the losers short in the whole trailing of the stops, right? So anyhow, so far so good on this. I mean, it's rallied almost back to the prior highs, turned into a really nice cup, but it's sort of happened, quickly here just in the past couple of days. And so, interestingly enough, this particular stock's up another 1.4% this morning. So another nice double-digit gainer here. Um, Triggered in barely above the trigger price here. So let's see. 89 was the trigger price, opened at 90.75. So that's $1.75, right? So if you wanted to compensate for that on the target, you'd be at 97.75, which it basically just blew through yesterday. So that's what I. It's another good example of not sweating the small stuff as far as the trigger goes, because that's how it's basically how you compensate for it. I draw, sometimes I draw these compensation targets and sometimes I don't, but I'll just put it on here just so we can see it, right? And you understand what it's all about. And so, the idea is that the idea is that you want to take partial profits at the target. That's why it's there, right? And that's the reason to have a target is either you're going to, sell all or sell part of it at the target. Otherwise, you just, stick with the stops. But see, the way that the way that everything is designed on the back end, or just the way that the system itself is designed, is that, and this makes a lot of sense. It's funny. I wish I had saved this, but I read something recently, somewhere on the net. I do a lot of reading, and I read something about how, the real edge in trading, and probably investing is not, not making all or none decisions, right? So, I mean, taking profits, entering in a couple of different tranches, instead of lump summing in and selling all. Honestly, you can gain a little bit of an edge, or a lot of an edge, by scaling in and scaling out. And so it makes sense to take some profits, but you have no idea how high some of these stocks, or what kind of moves they can make. And so the idea is, you lock in some profits, that reduces your cost basis, and then you stay with it. And so a lot of times it's going to seem like the trailing stop is lagging way behind, but the idea of the trailing stop in this system is to keep you in the game through normal price fluctuation, including pullbacks, including like normal, market cycle pullbacks, without necessarily getting knocked out of the position. So, and then of course, when a stock makes a parabolic move, then obviously like the stop starts to ratchet up and tighten up even a little bit differently. So, I haven't logged into the service on this in this browser this morning, and so you just have to take my word for it. But I wanted to show you one. This one that just got closed here most recently. I wanted to review this too. I wanted to kind of look back and see what happened. So this is a pretty good example of what I was just talking about, right? This ended up being a double-digit gain, but it kind of, it triggered in and it just kind of like went straight up at a 45-degree angle. And so I might be missing like a stop move in here. Sometimes the stops, I don't record every single one. Sometimes I do. It just depends. But it can get a little tedious, especially if it moves like an incremental amount from day to day. But I think you get the point here. So this stop, sort of followed the price up, and then when the price had gone this long at a 45-degree angle, basically for whatever reason, this particular bar here, the stop just moved right up to underneath of it, because it was kind of like, it's designed to sort of ratchet up price and time, I guess is what I usually say. Everything's a function of price and time. So it's actually kind of a nice little pattern. This was not enough of a dip to like re-trigger it, right? So anyway, that was one. I had one. Here's another example. Another good example of, and this was, I think this was like one of the biggest gainers of last year. By the way, I have obviously I have all the data. Well, it was one of the biggest gainers. I see another one on the list that was over 30%, but this was, this ended up being like up 31%. I haven't sliced and diced all the data from last year's closed trades yet, but you'll notice on the closed trades page that everything's like fresh, right? There's no new closed trades for 2021 yet. The stocks that I just looked at are all still open trades, and none of them have hit the trailing stop yet to get closed. And so kind of like a fresh start. And so one of my little projects is, and I'm just easing back in from the holidays, right? Like you think that you have like this big holiday, weekend. There's Christmas, and then between Christmas and New Year's, I had family in town and staying with us, and all kinds of family stuff and stuff around the house to do, and projects and different things. Just kind of enjoying a little downtime. It's a nice time to do it, but in your mind, you think, okay, as soon as the new year starts, then, I'm going to get right back into the groove and, get everything done immediately. And what you realize is that everything sort of stacks up and stacks up and stacks up over the holidays. And then, it takes a couple of days to even realize that just a few days into the new year, you're not going to get everything all caught up and finalized, all the things that you want to do. So at least I realized that. So anyway, long story short is, wow, look at the S&P here. Long story short is that I haven't had a chance to sit down and go through all the closed trades for 2020 yet and do my analysis. So that might be something I'll work on in between now and next week's show. And basically, I'm curious, like, what percentage of the swing trades hit the target, um, average gain, average loss, number of winners, number of losers, all that good stuff. Oh, and so that's part of what I want to do. And there was a long list. A long list. Let's see how many it was. 166. Seems like a lot. 166 swing trades last year. And so, we go through these cycles where maybe there's a handful of open trades, and then there's been periods of time where there was, 10 or 11 open trades, and obviously you have to pick and choose on that. So everybody's results are going to vary, but I think it was a pretty good year. I mean, as I look through the closed trades, um, I mean it's clear that the winners were significantly, I mean significantly by a lot, bigger than the losers, right? And of course, I had to go back and review. Obviously, the market tanked, back in February and March. So those little string here back in it looks like March. Yeah, March when the S&P lost like 35% in 23 trading sessions, right? So, we had a string of stop outs there, but they don't obviously don't look too bad. And then of course when things started picking back up, well then, but I think it turned out really well, all said and done. So I will try and get some numbers to quantify all that, but obviously you can download the CSV right from the closed trades page and do your own analysis if you like. Pretty simple stuff, but just a little time consuming, but no big deal. Okay, so real quick here, let's take a look at the pending trades that we have right now. Here's Boeing. Interestingly enough, I mean, but it's a really nice pattern. So here you go. So here's Boeing, and here's like the past here's the trigger price the past couple of weeks. Um, and guess what? So now the trigger price is sitting at 220. See how this works? And so it's another little sort of I'm not going to call it a quirk. It's just the way that everything was designed is, and I try and talk about this for the benefit of new members each week, is the way that a stock hits the pending list. And this is not the greatest example, but a stock will hit the pending list sometimes at the beginning of a pullback, and then like the trigger price may be way above, like just say it hit Boeing showed up on, it says 12/21. So that was the day right there, 12/21, that it hit the list. And in the initial trigger price may be way above the current price, but this is conceptually how it's designed to sort of work, is that initially, you wouldn't want to buy it and wouldn't want to buy it that far above it, but it's not really designed that the first day it hits the list, it's all set for buy the next day. It just means that it's starting to set up, and theoretically, ideally, you get something like this where the price sort of continues to pull back, and then the price and the trigger will meet in the future at like sort of an optimal level. And so there you go. So anyway, long story short, Boeing's kind of actually setting up here pretty nice. If I didn't, and it goes back to, what I think or whatever, or what, you could argue the case for and against Boeing, I suppose, but if you took the ticker symbol off of this chart and looked at it, you'd say, wow, this is kind of setting up. It's a pretty good looking chart. So, and some other good news. I'm going to try and wrap this up here shortly, but some other good news is that Jeffrey's been doing some work on the back end, and he actually has like some nifty little new thing that he's been working on to bring some additional stocks that may not have been some additional stocks to the pending list. So we may start to see some more of these like really super high powered stocks hitting the pending list. So just sort of expanding things a little bit. Obviously the logic's all going to be the same, for the trades in that. It's just a matter of some of the stocks, obviously, we've all seen tons of stocks that have really made huge moves, and the system doesn't always pick those up ahead of time, just due to the way that the pending universe is created. So anyways, a little improvement, enhancement on the back end to start the new year, and the only thing that you would notice is maybe some stocks that you haven't seen on the pending list. So once they trigger in, everything works the same way. Okay, so we looked at mRNA, and last week the trigger was at 132, and today the trigger is at 120. And keep in mind that this can change tomorrow, right? Like and so here's the thing: is that between last Wednesday and today, this has probably moved a couple of times, and so, but I think you get the idea here. And it's got a pretty good look to it too, right? Not a bad look. Quite frankly, this is a pretty significant pullback in this vaccine stock, which has been approved. I think I just read that it was approved in some other country like this morning or something, or today, but I don't know. But anyway, it looks like it's just sort of, it's basically came back. Really kind of interesting, how it pulled back and retested sort of like this major level down here. I'm going to change that to a different color just because, yeah, it's fine. Yeah, I mean, it just obviously, vaccine news, and it sort of went, it just went parabolic up here, got all crazy, but it's had this pullback and sort of a retest of, what I would consider to be like the big breakout level there, right? And it's held that, and so, the change in trend looks imminent to me. It kind of looks imminent, but hey, you never know. Um, and so, yeah, this is a pretty good setup right here. So keep your eye on this, and like I say, always check the trigger price on the pending trades, or if you're what's even easier is to just get up in the morning and see, and check the triggered trades before the market opens. So, oh, and that's one other thing I wanted to mention is that like this past week or so, past couple of weeks, but mainly like the past week, the update has been a lot later than normal, and part of that last week was due to the holidays and being out doing other stuff, that type of thing, and then just the past few days here has been sort of a function of rejiggering everything for the new year, right? Like resetting the closed trades and archiving last year's closed trades and some of the work Jeffrey's been doing on the back end and that. So anyway, hey, yeah, I know it would be great if everything was just updated, a couple hours after the close, but just bear with us and the schedule should get back to normal. Ideally, the best time to check everything is just in the morning before the market opens. So there's been a couple of nights where it got updated like really late at night. So it's all automated, but there's still like a physical aspect to running the data, and so like running the system and crunching it all out and having it update. There's still a little bit of human intervention there just to run the thing, and so anyway, we'll get back to our normal schedule of updating this early. And and the other thing is Jeffrey's on the West Coast, and so to him, what seems like late to me is middle of the afternoon to him. So moving on here, real quick, Pfizer setting up here again, right? Had this same thing as mRNA. It's a nice pullback and kind of basing out here, so you can sort of guess where the trigger price is. And then last but not least, this ABC. Look at this. This is here's one of the here this is like probably the biggest anomaly that that can happen, right? Well, I mean, it definitely is. And so here's the thing. There's a couple things to point out about this. One is that we've been following this thing, and you can see all the different how the trigger prices have ratcheted down, ratcheted down, ratcheted down, and then finally yesterday, you got like this breakout of this channel right here, and it's just the luck of the draw, right? Like it happened to close. It closed at 97.76 instead of closing a little bit higher and actually triggering in. And so here's the thing: is this is just basically one that I would chalk up as an anomaly. And so tonight, like whatever this thing closes at today, theoretically, like by the book, it's going to be an open trade tomorrow, right? But I talk about not sweating the small stuff on the gaps and that, but I got to say that and hey, you never know. I mean, today, whatever the news is today. Now, see, this is bugging me, and so I'm gonna pull up and see what is causing this stock to make this move here today. Um, Walgreens agrees to $6.5 billion healthcare sale to AmerisourceBergen. Huh. AmerisourceBergen to buy Walgreens unit for $6.5 billion. I wonder what unit. That's interesting. So, $6.5 billion deal here. So, I mean, it doesn't look like they're buying Walgreens as a whole. Obviously, $6.5 billion. They're buying acquires Walgreens Boots Alliance unit. Huh. Interesting. ABC raises fiscal 21 earnings per share outlook. So yeah, Walgreens sells majority of Alliance Healthcare pharmacy business to ABC. So there you go. So anyway, yeah, I mean you just and see, so that's sort of an anomaly. It's a news item that hit. Nobody was expecting it, and there you go. And that happens. And so, the question is do you want to do you want to buy this thing at the open tomorrow? I would probably I'd probably be inclined to pass, right? So, and then the question is like, should Jeffrey and I make a decision to, to just say, hey, this thing was an anomaly. It's too far above the trigger price to, you know, to buy tomorrow. I don't know. you know, Probably we haven't done that in the past that I can recall. Like we haven't made any formal decisions on anything like that. But where I would make a decision, like suppose they were getting bought out, right? Like suppose this thing gapped up to 115 today because someone was buying them out, and then it was just going to flatline. Well, I'd make the decision, obviously, to not show it as an open trade. So, but I mean, the system is a system, and obviously, like I said earlier, you can use as much discretion as you like, and so I would probably be inclined to say just take a pass on this one. So, anyway, so there you go. I just went over all the. Oh, and one last thing, like I said, the luck of the draw. This thing could have easily closed a little bit higher yesterday, and then, you know, and then it would have been a buy today. So, um, and hey, who knows? I mean, it could, this could be the start of a run that looks like this. So, anyway, it is what it is. There's going to be plenty of good new trades coming through the system as we go forward, and so I would probably, if I were you, if I were me, make a conscious decision to just sort of avoid a situation like this, even though it will show up in the system as an open trade and triggered tomorrow. So anyway, with that said, hope you enjoyed the show today. I always say that I'm going to try and make these things shorter, and then I end up using most of my time, but it is what it is. And so I will see you guys back here same time next week.